and we will need to reorder those things that need to be submitted on our behalf, and that would be the audit and the annual report to the state. So we will start with the audit review. Steve, this is your committee.
Morning, everyone. Morning. I'd like to call to order the meeting of the Audit Finance Committee. Today's purpose is to review the annual report and the audit. And on that note, I will go to Brian and Alex from UHY.
Thanks. Yeah, so thanks for having us this morning, and we'll be brief. I mean, it was really a routine audit where, UHY hired to do the independent audit of the Convention Center Authority, and we performed that audit in accordance with generally accepted auditing standards. And and so if you want to, just I guess move on here. Basically, just covering the general audit objectives and strategy, the areas audit focus, financial highlights, the most important, the reports to be issued, and required communications with those charged with governance. And just to skip a few pages here. Yeah, so if you want to stop there for a second. It's a risk-based audit, as you guys are aware, consistent with prior years. We focus on, what's material to your financial statements. That could be both quantitative and qualitative. So the areas of audit focus are pretty similar to prior years, really just looking at the operations of what's happening and, how you're impacted, obviously being shut down. And in the current year, with the COVID-19 considerations, and you received a, shuttered grant, of approximately $630,000. So that obviously helped the financial statement situation in the current year. Just to, move on here for a second. But overall, the financial highlights, you can see the net position, decreased from 76.3 million to 75.3 million. So it was a decrease second year in a row by $1 million this year on paper. But just to put a couple stresses there, the primary non-cash element there is depreciation of over $2 million. So your cash position actually went up from the cash was 2.9 million last year, 3.6 million this year. So although the statement of net changes, which is on the next page, if you want to go to that for a second, so we have the net change of a negative 900,000. However, that depreciation number, if you add that back, you do have a positive change in terms of cash flow. The cash increased by 744,000. The majority of that could be attributed to the shuttered grant, but your hotel occupancy tax, this year versus last year, it's not back to normal, as we all know yet, but it was 1.9 million in 2020, 2.8 million in 21. So that, along with the grant of 627,000, really helped offset the loss from operations. But even general revenues, of 615,000 from activity to move up to 848, it's starting to reopen, and hope obviously that trend continues in 2022. And that increase in revenues was offset by the increase in contractual service expenses. The footnotes to the financial statements are really comparable, consistent with the prior year. There's no new accounting standards, no new accounting policies that were adopted. The one thing I did want to highlight, because it's not really reflected in the change in operations, but you do see it on your balance sheet or your statement in that position, is the decrease in the Opeb liability. And that's the health benefits that we're providing to current employees, right now, participation of one, but in the last year, the actuary had assessed that liability of 654,000. This year, it's 128,000 due to the change in the health provider, basically, at different rates, reduction in costs. And the way the actuary assesses that and the way the GASB, governmental accounting standards, require you to account for that, basically the net change is hung up for temporarily in what they call a deferred inflow of resources. It's not a liability, but it's on the statement in that position as a deferred inflow, and that is recognized over the remaining service time, which right now is expected to be, the actuary has determined it to be 1 year. It's obviously unknown whether it'll be longer or shorter, but basically that benefit pickup is going to be recognized over the next service period. So the liability is reflected on your balance sheet, that significant reduction, but the actual change in net position, you'll probably see it next year. If that makes sense. I know it probably doesn't because it's accounting.
What happens after next year then?
You'll have your liability of 128, thousand, which is the current, and next year it'll continue to change for the current year service costs and any change in expectations or cost assessments. But if that projected cost hasn't changed, you're going to end up getting that deferred inflow is amortized down and recognized as net income, basically as an actuarial gain.
Okay, all right. Great.
And, in terms of the rest of the footnotes, the only thing, that's new, and that Opeb is explained on page 18 of the financial statements in a lot more detail. But the grant revenue in page 22 of the financial statements, not the presentation, but note 10, just explains a little bit about the $627,000 shuttered venue operators grant new this year. And that was received, you had until July of 2022 to incur the expenses and recognize that revenue. However, expenses, you had already incurred that, so it was fully recognized in 2021, the full grant amount. So it's reflected in these financial statements and disclosed accordingly. In terms of, and that's really the financial highlights. In terms of the audit, there's no, all adjustments have been recorded, which is really just making sure that Opeb is reflected properly, the New York State retirement system, is reflected properly, and, everything's been recorded. No disagreements with management, no past adjustments, and no consultation with other outside auditors that we're aware of. And, again, the estimates, disclosures are comparable, neutral, consistent with the prior years. And most importantly, us, UHY, as the auditors, were independent of the authority. So the one thing, finally, I guess, is if you could pull up the financial statements for a second, the other document. Our opinion, UHY's opinion, just one more page down, is the independent auditor's report, and this did change in the current year due to a new accounting standard, SAS 134. But basically, it's really reformatting and showing a little bit more detail for just transparency to the users. But it starts right off with this opinion, and so the opinion used to come last. Now we're just starting off with the opinion, and it's important to note it's an unmodified opinion. That's the highest level of assurance you could get from an independent auditor that the financial statements that are presented are free of material misstatement in accordance with generally accepted accounting principles. So we're happy to report that a couple years ago, as you recall, there was a 1-year departure from generally accepted accounting principles to record land when it was transferred to capitalize Albany at a different basis. We didn't record for a couple years, but that's now, because that was over 2 years ago, it's no longer reflected. Last year there was still mention of that because of the prior year transaction. But this year it's a straightforward opinion, and then the next page does, it goes through the responsibilities of management. Management's responsible for the financial statements, and again, it's just a little bit more detailed in the opinion and outlines what the auditor is responsible for, what the management's responsible for. So again, just a little bit more detailed oriented.
Yeah, so this change is not only for the Albany Convention Center, but for all the entities. So basically, if you're familiar with the public company opinion, it's very similar as this one. All the public companies starting with the opinion, which is the audit opinion. And Brian mentioned based on our audit and audit performed for the Albany Convention Center, we are very comfortable to issue opinion. We call it unmodified opinion, which is clean opinion, highest opinion. Basically, the financial statement in front of you, which the Brian just walked you through, properly reflect the financial condition of the Albany Convention Center authorities and also operation for the year. So that's why on the top. And it discloses a lot more the auditor responsibility, including management responsibility, including the going concern. So many entities now have maybe have more focus on the going concern consideration. If some of the entities may have some cash flow problems in there, the opinion will point on more to that direction in there. So you will see the opinion has been extended from the maybe 1/2 page to the 42 pages in there. And at least not only for this entity, you're gonna see across all the board for the non-for-profit, for the commercial entity in there. So more line into the public company with the non-public companies. Just give it a little background on this.
Thank you, Alex.
Any questions related to the financial highlights or the audit in general?
Anyone?
I actually have a
Sure,
question.
sure.
Where's the depreciation come from? Is this on the asset of the building
Yeah,
itself?
absolutely. So, yeah, basically the roughly $74 million cost of the capital, the building. And so it's being depreciated over its estimated life, roughly, just over $2 million a year. So as long as you're in good standing, right, and over time, obviously, as we age, we'll have to, you would expect repairs and maintenance or replacement parts and being capitalized to offset that. But in the beginning years, it's really a paper entry that you're seeing that negative hit, but still a rather new building that's in full operation. So, so from a cash position, like you said, you're very strong, but from a operating statement, that depreciable life, you would expect over time to have to offset that with reserves and improvements and such, which you have some, but not offsetting the depreciation up to this point.
Thank you.
Thank you. So on that note, we'll go to the annual report. Meredith and Rob?
Sure. The annual report is actually the reports that is required by the Public Authority Accountability Act. It's something we do every year. And as part of that report is the financials. So every year we have to wait until the financials are approved because those numbers get inserted into the what's called the annual report, and that annual report gets submitted to the state via the Public Authority Reporting Information System, an electronic system run by the authority's budget office. We also, as an authority, take a sort of a paper copy of that, and we have it posted on the website as well with certain links to it. And it just, similar to any sort of annual report, it just goes through operations and highlights and who the directors are, et cetera, and the financial statements.
Good?
Yeah.
Okay, no questions? Rob, or for? So on that note, I think we can take one motion to recommend adoption.
Correct,
Right.
for both, yes.
So I have a motion to recommend adoption of the annual report and the audit at the full meeting.
Make the motion.
Dan?
Second.
Sarah? All in favor?
Hi.
Okay. And I'll take a motion to adjourn.
Motion.
Second.
No. All in favor?
Aye.
Thank you.
Thank you.
Okay, so we're on to the special meeting, the special audit committee meeting. Thank you so much, Brian and Alice.
Thank you, guys.
And I'd like to take things out of sequence and do the adoption of the audit and the annual report that we just approved, so that John can get to session and represent us.
That's not to be there, but that's beside.
So again, can we take these together, Bob?
Yes.
Steve, do you want to introduce your report from the last meeting and ask for the
Say that-
number 3? Oh, I'm sorry, it's
Under tab 4,
under tab 4.
yeah, it would be the resolution to adopt the financial audit, and then the second one is the resolution to approve the 2021 annual report and submission to Paris.
So we're taking one motion. We're looking for
Bob said that we may.
one motion to approve, as recommended in the Audit and Finance Committee, the annual report and the audit.
I'll move the adoption of both reports.
Second.
All in favor?
Aye.
Aye.
Thank
Okay.
you.
Thank you for doing that, because it gets us in, we've got enough folks that we can do that.
Good graces with the state.
Michelle, do you want to finish that category, or do you want to move back up into the agenda? I just want to know what,
Yeah, would you agree to just do the financial, Steve?
Go to the.
in that same
the-
category.
That same
under tab
category?
4, we have the January and the February.
February.
reports.
Yeah, and I'll go to Meredith. I think she's going to combine the
Right,
two into one, so.
yeah, so January, if you go to tab 4, I'll show you.
Can we introduce Amy too? I mean,
Sure.
Sure, this is my colleague, Amy Thompson. She's sort of been the person behind the scenes for how many years now?
6 maybe?
6 years. So she understands the financials quite well. She knows many of the people here already. And she will be attending this board meeting and the next board meeting. And then eventually she will take over my role of presenting the financial results on a regular basis. But Amy's very familiar with parish reporting. She works, I call her Downtown Amy, because she works with many other as Sarah knows. She works with CAC as well, so she's familiar with the systems, the reporting, and she's very familiar with the Convention Center Authority as well.
Probably more familiar than she wants to be with the Paris reporting system.
Yes.
On like a daily basis.
Right.
So if we go to tab 4, there's the pullout financials, the first one being the January. But I want to draw your attention to, I think it's the 3rd page in the statement of net position as of February 28th, 2022. This will be inclusive of January, these results. So normally, I think we report on a quarterly basis, so we'll be reporting year-to-date results as of February 2022. So starting with assets, again, as was mentioned in the audit report, there's a continued strong cash position with $4.2 million in cash and cash reserves. The Capital Center receivables, $245,393. Total current assets are $5,223,710. Of that, $525,000 is due from Albany County, which is the hotel occupancy tax of $525,000. Moving on to fixed assets, total fixed assets were $71,052,944, with total assets of $76,276,654. Moving on to liabilities and equity, total current liabilities, $1,268,204. Total equity was $75,008,450, with total liabilities and equity of $76,276,654. That finishes the statement of net position. Moving on to the statement of activities on the next page, also as of February 28, 2022. If you look over at column, the fourth column in, which is column O, that is a year-to-date column. I know it says January 22, but it is year-to-date. So looking at that year-to-date column, which would be the results of January and February together, for the Albany Capital Center, total operating revenues were $95,087. The year-to-date budget was $288,172. So there was, they're not quite meeting the budget at this point. As far as operating expenses for the Capital Center, total operating expenses year-to-date were $384,098. They had budgeted $420,604. So that gave them a loss of $289,011. So the actual loss was 218% greater than what had been budgeted. Moving on to the Albany Convention Center Authority, that detail. Total income for the Convention Center Authority was $400,539. Total operating expenses were, where is that line? $451,746. With, again, depreciation being the majority of that, the non-cash item, giving them a loss of $51,207. They had budgeted a loss of $121,977. So altogether, between the Convention Center and the Capitol Center, the loss was $340,218, and the budgeted loss was $254,409. So again, the actual loss was 133% greater than what had been budgeted.
I just make one comment. I mean, the difference between the year-to-dates, the actual numbers, and what was budgeted is primarily due to when these budgets were prepared. There was a lot of wishful thinking that the status from COVID would get repaired a lot quicker, and that didn't happen.
And if I could add to that, it was also based on some assumptions with respect to schedule. And what we've seen in the schedule, and Shannon will be able to speak to this in more detail, is we've seen postponements. We've seen people keep the contract but move it ahead in the schedule. So the work that originally was, or the events rather, which were contracted for January and February, have become events in March and April and May in some instances. So the business isn't really lost, it's been shifted within the schedule. So some of those early commitments to revenue were not there. So it's a combination of things. When we had to predict, true, because the budget has to be turned in by 30 September. But it was also based on contracted events. Unfortunately, we're not seeing cancellations, but we are seeing postponements. That still persists to some extent. Anything you want to?
Yeah, I mean, I don't think any of us thought that we would see the volume of cancellations in January and February. I think we were all hopeful to start this year kind of going forward in a good direction, but it did take a little bit longer to kind of get through that. We even had 2 events cancel in March as well. So we've even seen some spill over into the March month, but to Duggan's point, all of them have been rescheduled in the calendar and just pushed a little bit later. It's definitely caused some clogging of our calendar of, perhaps open dates that we would have available that now are being, so much used again, or twice in the calendar year. But, we're doing the best that we can to continue to ease people's minds and continue to encourage them to meet in person.
And to Meredith's point about when these things are reconciled, we have a cutoff point at the end of the month, and that's true, but not always, we haven't always seen the events reconcile as of the end of the month. So some of this, if it were on a cash basis, we'd be able to explain it a little differently, but on an accrual basis, it shows a greater loss in some instances than actually exists. This month so far has been very busy too, so that's a good thing. So we should be able to report some pretty good news in April.
Yeah, probably one of the best months we've had since COVID started.
Certainly since COVID started, yeah, and comparable to some of the past events we've had.
Duncan, and some of the underperforming revenues, is this attributed to what the two of you are talking about? Like, I look at, catering income, what we budgeted, and and what it was actually brought in is significantly lower. Is that,
It's impacted a couple
delay
different
of
ways.
these events?
It's impacted by the absence of an event, but it's also impacted by lower attendance, because another thing that they're experiencing is there's still a reluctance to attend in person. So some of the estimates that we base it on, or not all, some, the estimates are based upon what the meeting planner gives us initially, and that goes into the budget. And ultimately, post-event, the actual numbers are factored in, and that's the information that Discover Albany provides us in terms of the economic impact. In the meantime, we're relying upon those planner numbers. Then we get the actual at the event, and we make the adjustment, and we see where it's impacted the catering. Because a lot of times catering is per head, per attendee. So if they estimate it at 300 and it turns out to be 250, and that's probably about where we're seeing, right?
Yeah, even we had a New York State Association come in January. They usually traditionally for the last 5 years have had, 400 or 500 people. They had 175. So, that's less than half than
That was the
we used to do.
extreme. That's an extreme, but we're certainly seeing anywhere 10 to 15% reduction.
For sure. Yeah, I would say the average, I would go even a little bit higher, is about 20% on the higher end. But yes.
Are you seeing that pattern in future bookings too, where they're?
No, I wouldn't say future bookings. I think anything past 2022, people are fairly confident that they're gonna have, a rocked out year. And even events that are latter in the, maybe fourth quarter of 2022, we're finding the confidence of those clients very high. That their people are excited to get back together. They haven't been together in 2 years, and, people are ready. I think this first quarter into second quarter, we're still just slowly getting up the hill. But I would say future bookings seems to be, the confidence of clients is growing.
Well, I want to go back to the point too of when we were building this budget, it was in the September timeframe,
Yeah.
and at that point, the numbers were so much lower. It was pre-Thanksgiving spike, pre-Christmas spike, and so this organization particularly, Shannon and her team and Duncan really have been good about projecting figures that really pan out.
Yeah.
The spike that we saw, I imagine, between November and now, it really seems like what rocked these numbers.
Yeah,
And
yeah,
so-
we had a very successful September and October. And then it was like after October 31st, it all kind of got jumbled again. Yeah.
So if it continues to go that way.
Yeah, we're definitely moving in the right direction. We're definitely seeing the light at the end of the tunnel, especially after, to Duncan's point, the month that we just had. We still have to get through, another week of it. We had some very, very successful conferences, and we had a lot of people through this building. So it was kind of nice to see it back in action.
Michael, did you have a question? I thought I saw your hand up.
No, I totally agree, it's, it's crazy, you make your best educated guess based on what you know, and clearly I think business is picking up, and, but, there's room for, it's not quite over yet, so it's, I feel like it's exactly trying to forecast what the hotels are gonna do, and you make a good educated guess, and, I sit here and think you're doing awesome. I mean, it's impossible to guess, and you're moving forward, and things are improving, but it is a difficult situation, and we're not quite through it yet. So I think I 100% agree with what I heard.
Thank you.
We're good?
We're good?
Michelle, do you want to go to the minutes next?
Yep.
Clear it up?
We're
Evan?
now on
Number 6, please. Thank you.
number 2, approval of the minutes, and you'll find that on tab 3, is that correct?
Yes, tab 3.
Okay, Bob, can we take all 3, or do you want them separately?
They're all on the same date.
They're all on the same date?
Yeah, those are the 3 meetings that occurred on the 27th.
Okay.
Part of
Yes,
it.
that's fine.
Yes?
Yeah, all three at the same.
Okay. Okay, so may I have, any questions or comments about the minutes before we ask for a motion?
With motion to approve.
Steve? Second. John, thank you. All those in favor?
Aye.
Aye.
Thank you. Any opposed? Great. Okay, so we have trees screaming in the forest from our packets this morning. And I guess we're down to Bob, the legal
Nothing-
report?
Yeah, nothing to report from the legal side.
Okay.
Good report.
It's always good.
Over a quick operations update.
Yes.
The next. First of all, Shannon is back, and she's here today,
Hello?
back full-time. And while her absence was noted, presence is appreciated. So things are going well.
Thanks.
We asked Baker to put together a review of the anniversary plan. That's under tab 5. It's the first item under tab 5. Evan, could you pull up number 13, please? The full report will be next month because we'll have the results. We'll know what the impacts were, the media, whether print, visual, or through social media. But this is an idea of what's been done, what's put together with ASM, Baker, and the authority to recognize the 5th-year anniversary, 5 years ago, March 1st, opening. So it's a pretty impressive list of opportunities that we have here because we have a very favorable media environment. Everybody was happy about it. They enjoyed it. And as Shannon mentioned a moment ago, we had a lot of nice events this month. So we've been doing some drone work, flying over the Brewers Festival, for instance, and we had Dropkick Murphys here with great attendance. We've got the florist organization this past week. We have upcoming wine festival. So a lot of good events this month, and we've tried to tie everything with the 5th anniversary. So this just gives you an overview of what we've done. It did require some investment on our part. We were investors in GamerCon, and we've had some other investments in media celebrating not only the events, but also the 5th-year anniversary. And next month, we'll have a full report on the impact, what was the return on those investments. So far, it looks very good. The initial reports from Baker, I think, were very consistent. We had great media response. We intend to continue the anniversary as well with NYSET coming up, welcoming them. We're making extra effort to make sure that they are, well attended to. It's a very important event. It's a repeat, and it's one of the largest events, and very importantly, it involves 2 of the facilities of the Capitol complex, engages the Empire State Plaza, and engages this facility, and of course relies upon the artery that is the Empire State Plaza walkway. So we're going to spiff that up and make sure it's a welcome opportunity for the NYSET folks. Any questions about what we did with the anniversary? Hopefully, any concerns? I'm sorry, go ahead, Mike.
No, I do not. I'm good.
Okay. Any questions regarding the outcome? We should be able to answer next month.
Yes.
The next tab is just simply a summary of where we are in capital improvements. You'll note that in green, highlights shows what we've completed and what are in progress. It was just a courtesy report, just give you an update on the things that, we informed you we're going to try to do this year. And working closely with Shannon and her team, little things. I mean, we just finished the new wallpaper, the replacement wallpaper on the east end, the far end of the upstairs level. And this morning, we're putting in a chair rail so that will protect that paper. Probably something should have been done as part of the original design. Didn't know it until we got into the use of it. And we've been bringing a painter in on a regular basis, a couple days at a time, spiffing up, cleaning up, walls in the areas of high use and high impact. So those types of things are ongoing. Were there any questions about the capital improvement work and maintenance? If not, then Michelle, we would suggest you adjourn from the public session.
Unless there's anything, Shannon, that you want to add quickly before we go to executive session?
No, just to thank you all for your continued support while I was away. I'm happy to be back and getting my feet back underneath me. Like I said, we've had a really great March. It's nice to see the events back. We're looking forward to NYSET, and we'll continue to move the ship forward.
Thank you.
That's it. Thank you.
All right, then I will take a motion to adjourn this meeting to go into executive session. Thank you, Dan. John? All in favor?
Aye.
Thank you.
Okay, Amy and Meredith, you're all set?
You're all set.
Stay, if you would, please. And then, Evan, would you please bring up number 15 when you get a chance, and end the streaming for the present? Let us know when we're all set, okay?
All right, can I, please
Okay.
have a
We are
motion to
back- We are
adjourn?
back streaming now. I'm all set?
We're good?
Yep.
Okay. Motion to adjourn, please?
Motion.
Dan?
There'd be a motion to come out of executive
Oh,
session.
out of executive session.
Yep.
And into,
Second.
okay. And then a motion to adjourn, please.
Motion.
Okay. Thank you all.
All right.
Thank you.
See you soon, Mike.
Enjoy the sunshine.
Look forward to it. Thank you.
And on that note, for the